Hey everyone, welcome back to Corporate Decoder. Today, FLYE just filed a current report and we are seeing a big reverse stock split approval. Quick note, this is not financial advice, just my take on public filings for educational purposes. Shareholders gave the green light to a reverse stock split and a new board, but I am seeing some classic signs that have me raising an eyebrow. Alright, so FLYE, E-Group Incorporated, ticker FLYE, they filed this current report on the 17th of June 2026. The main event here is what happened at their annual meeting of shareholders that same day. This is where the company tells us what was voted on and how the shareholders voted. Back on May 5th, there were over 1.6 million shares of common stock on record. Out of that, about 932,000 shares, which is roughly 57% of the total, were represented at the meeting. So, yes, they had enough people there to make decisions. A quorum was present. First up, they voted on who will be on the company's board of directors. They had 4 nominees up for election. All 4 were elected to serve until the next annual meeting. Looking at the votes, it is pretty clear the shareholders were in favour. For Lisa Fan, there were over 926,000 votes for her, and only about 3,900 against. The other directors had very similar voting results, all overwhelmingly approved. It seems the current leadership is well supported by the voting shareholders. Next, they asked shareholders to approve their choice for the company's independent auditors. The firm Fortune CPA Incorporated was recommended to audit their financial statements for the fiscal year ending the 31st of March, 2026. The shareholders approved this by a wide margin out of the votes cast. Over 930,000 were for ratifying the auditor, with only about 577 against and a small number abstaining. So, the auditor is good to go. Now, this is likely the biggest news from this filing and the one that truly grabs your attention. The shareholders also approved a proposal to change the company's structure to do a reverse stock split. This means they will reduce the number of outstanding shares. The ratio can be anywhere from 1 for -5 to 1 for -100. The actual ratio and timing will be decided by the board of directors within 1 year. The voting results for this were also positive, with over 917,000 shares voting for the reverse split and about 14,800 voting against. It is clear the majority wants this done. It is also worth noting here that FLYE Group Incorporated is identified as an emerging growth company. This means they get some regulatory flexibility, which can be good for growth, but can also sometimes mean less transparency compared to larger, more established companies. They have also elected to use the extended transition period for complying with new or revised accounting standards. Now, what does a reverse stock split really mean for a company like FLYE? Historically, reverse splits are often used by companies whose stock price has fallen very low. This is often done to meet exchange listing requirements. Like staying on the Nasdaq, however, it doesn't fundamentally change the company's value. Think of it like cutting a pizza into fewer slices. You still have the same amount of pizza. For example, back in 2021, Kodak did a 1 for 20 reverse split. While the split itself didn't cause the immediate drop, it was part of a pattern where holders saw roughly a 40% additional drawdown over the following 90 days. A $1,000 position there became about $600. This is because a reverse split can sometimes signal underlying financial weakness or be a precursor to further struggles if the company's core business doesn't improve. It is a tool to keep the stock price up, but it doesn't fix the reasons why the price might have fallen in the first place. While this filing doesn't go into the specific financial statements themselves, the decision to go for a reverse split, especially a potentially large one like up to 1 for -100, often comes when a company is struggling to maintain its stock price. We know from external reports that FLYE is in the auto manufacturers sector with a very small market cap of around $4 million and a current price of $2.3, which has seen a huge swing from its 52-week range of $1.62 to $161.8. That massive difference in the 52-week range itself is a huge red flag. It suggests extreme volatility. This reverse split is an attempt to combat that. The shareholders have approved the directors and the reverse split. The question now is whether this action will lead to a turnaround for FLYE, E-Group, or if it is simply a way to prolong the inevitable for a company that might be facing significant challenges. The approval of the auditor is standard, but the focus really shifts to the business performance that will justify the reverse split. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. You'll find our Discord link in the description below.